Morning, everyone. Welcome to Learn the Secrets of Competitive Apartment Quoting. I am Anae Augustini, CEO of CID Insurance Programs, and we're really lucky today to have Michelle Belden, who's our commercial underwriter. She specializes in apartments, and she does lesser's risk in condos and a lot of the habitational and commercial building business for CID. And so we're going to be doing an interview with her today. So we're lucky to have her. And then I want to introduce Jacob Cole, who's our marketing specialist, and he handles everything behind the scenes. So say hi, everybody.
Morning, everyone.
Okay. So webinar logistics. We're excited to have you guys here. Would love to hear personally from each and every one of you, but because there's so many people, it's hard. We can't all talk at once, so everyone's going to be muted. You'll be able to hear, but you won't be able to speak. So the questions are really important to us. We want to take the time to during the webinar to answer any questions that you have, so feel free to type them in throughout, and we will be watching for those questions and answer them as we go. So you can make sure you use that chat room. Everyone else will be able to see your questions, so that's a nice kind of thing that it may prompt questions from other people, so I think that's a valuable thing. And then there'll be a short survey. We really want your feedback to find out how we're doing and how we can make things do a better job for you. So our course today, it's all based on an interview with an apartment specialist underwriter, that be Michelle. And so what are we going to be talking about? We're really looking for what is the important information that you would want to know from a knowledgeable apartment underwriter. What questions should you be asking to get the right information? And then there's a lot of things that could go wrong with apartment insurance because it's property driven. And there's a lot of variables with coverage. So that is some of the things that we'll be going over today that will be important. And then let's learn about all the coverages that are needed for apartments. So let's get started. So Michelle, talking about building types, how would you rate an apartment? Maybe go over a little bit of the different types of apartments, and then how you got some of these oddballs like a mixed-use occupancy. How do you go about rating those, and what do you recommend for our audience?
Sure. So for me, generally speaking, most of my carriers define an apartment as 5 or more units. So I know there are some units, 4-unit apartments, and sometimes those are considered apartments depending on what carrier is writing them, and then others don't consider them. And then so anything that's 1 to 4 units falls in like a gray area because it can either be considered under personal lines or commercial lines when it's being a rental. So it just falls there. It just varies by the carrier and the market and what type of coverage that you're able to get for them. And then, like Anae was asking about a mixed-use apartment. So for us, a mixed-use building is, generally speaking, you've got commercial units on the bottom, and then you have residential units on the second, third, or however many stories it is, or, it could be a little bit a mix of that. So for when they're mixed-use buildings, we rate off, the GL is rated on the apartment portion of it, is rated off the number of apartment units there are, and then the GL portion for the commercial space is rated off the square footage. And then where problems can be run into on that side as well is the type of tenants that are in your building. Are there just retail stores? Are there restaurants, office locations? So your tenants, as you know, on the LRO side, that's where a lot of carriers are running into encounters of what type of occupancies they'll accept and things like that. And then other types of what people might consider an apartment are rooming and boarding houses. However, since there are shared exposures, a shared kitchen, possibly shared bathrooms and things like that, those aren't actually considered apartments. They are, like I said, they're considered either rooming or boarding houses, and those are not rated as an apartment. They're actually rated separately, and generally speaking, for those type of buildings, you're being rated on the number of beds in the building. So, there could be 10 rooms, but there could be 2 beds per room. So you'd actually be rating it on a total of 20 beds instead of a total of 10 units.
Excellent. Do you have markets for 1 to 4 unit buildings, Michelle?
I do. So again, it varies. In the state of California, because of the earthquake requirement, not all of my carriers are able to offer property coverage. But if you go outside of the state, that's not a problem. And then it also varies by if it's in the name of an individual, a trust, an LLC, a corporation. But I do have markets available, both on as a package or monoline GL or monoline property for the 1 to 4 units.
Oh, that's great. So on this interior and exterior unit entrances, I don't know if you went over that, but what should our brokers be looking for when what are the underwriting concerns or guidelines that we need to pay attention to?
Sure. So exterior entrances, you're leaving the building and you're going directly outside. So generally speaking, on 1 to 2 story buildings, that's fine. You're going directly outside, and you only have to go down a flight of stairs. In the event of a fire or something like that, something that is multiple stories, 3 or more, with interior exits. You're looking for 2 means of egress. So that way, not everybody's trying to facilitate and get out through one. Where somebody could get caught, and not everybody can make it out the building. So and things with interior entrances, you're generally looking for either front or back or a side entrance, or maybe there's a stairwell down the side of the building that you can get to from your window. So as long as there's just multiple ways to get out of the building, that's a big thing that carriers are looking for.
So your interior ones, your interior entrances are going to be more problematic potentially with the egress.
Correct.
Okay, got it. That's important to know. Okay, so let's talk about property values. This is always, I think, a difficult subject for people, and especially, some people are really good and know how to write property. Not everybody does, and so property intents like apartments are property heavy. So you really have to understand about building square footage. I'm going to skip to the second 2 first, Michelle, and then we'll come back up to business income. But what do our brokers need to know about the building square footage?
So generally speaking, you're going to have a cost per square footage is how you're going to determine your building value. So for us, it varies. It will vary by state, and even within a state, it's going to vary by the county or the city in which risk is in. So for me, my typical, what I see for cost per square footage generally ranges anywhere from $115 to $225. It really depends on the makeup of the building. Is there an elevator? Do you have some sort of like monogrammed flooring or other things that could drive the building value in the event of a loss that then, wanting to recreate the building how it was, those things would need to be accounted for. You're not just going, the basic bare minimum, just, if you had tile and things like that. So those are things that will drive the cost. Or the cost per square footage. But like I said, it will vary by your city and your state, and sometimes I calculate myself when I get in a submission. I'll take the building limit, I'll divide it by, and then if I think it seems kind of low, I'll go back to you and say, hey, I feel like this building limit seems a little low. Is this the right information, the right limit, the right square footage? Even my carriers, some of them, they run their own. It varies by an ITV or whatever they may call it. They'll run their own sometimes as well, and they'll even come back to me and tell me, hey, this is too low, like our minimum's this, so I was only able to offer you terms at our bare minimum of our cost per square foot. So you'll see that, and I'll always make note of that to you if there is something that would cause a discrepancy in the cost per square foot that you originally provided to me.
So you're saying that it's as simple as if you have an existing building value, you can divide that by the square footage, and that's going to give you the cost per square foot.
Correct.
that's a good determiner. It needs to be within a range, and that makes it that should make it really easy. And if you don't have a building value established, like it's a new purchase, then you're going to be actually establishing a value, cost per square foot, and then multiplying the square footage by it to obtain the building values.
Correct. Like you can run a cost estimator for it, or even like you were mentioning new purchase. Generally the bank is going to probably already have some sort of limit in mind that they're wanting for the building because they've done an inspection on it, or they've run their own cost estimator and things like that. So you kind of on the new purchases and things like that, you kind of already have a starting point if you're not sure what to do.
Good. Okay, that's helpful. All right, well, let's talk about the condition of the building, which is always an issue, especially with aging buildings, and we have a lot of them in every state. So what is the building age underwriting criteria, Michelle, of most of the carriers?
Carriers right now, I've been seeing a lot of changes in the marketplace. They're getting tighter on the building years that they'll accept. Some will go as early as 1950. Some are going as early as maybe 1970 and 1980. But you are in luck. I do have markets that will consider things built as early as the late 1800s. I actually just quoted a building last week that was built in 1897. It's obviously been completely renovated because if it was still of 1897, I probably wouldn't have been able to write it at all. But so I do have markets that will consider the older buildings as long as there have been building updates. And so when I'm talking about building updates, I'm referring to the wiring, the plumbing, the heating, and the roof. Most of my carriers are at about between 25 and 35 years that they're looking for the upgrades. I generally tell people 30 is a good median to be there. They're looking for updates to all of that. For me, I don't actually need, I know some carriers require like actual invoices or certificates and things like that in order to prove the building updates. I don't need that. I only need the years that they were updated because I know, if it's a new purchase, the previous owner could have been the ones who did the updates. And so it's like, well, you're not going to be able to get that information from them because, they don't want to give it out, which is totally fine. So we're just, we're looking for buildings that are well maintained regardless of their age. A brand new building can look just as good as an older building that's been recently updated. And, you have pride and ownership of how you maintain your building and, you're keeping up with it. You're making sure that the rooms are in good condition. You are making sure the outside looks good, taking off if there's somebody tagged your building or something, just, having good upkeep of your building and pride and ownership is, it's a good way you can tell the condition of the building.
That's a really good point, Michelle, because buildings erode over time, and if they're not regularly maintained, then that is where the problems begin, and it's hard for building owners to actually afford to actually upgrade all at once, and maintain them after they've gone a long period without maintenance. So that's a very good point. Thank you. So let's talk about loss control. What are the carriers looking for? I know there's a couple special concerns we're going to talk about, but in general, what are they looking for, and what should our brokers be looking for when they inspect a property? Because they've got to be sort of thinking like the loss control inspector is going to be thinking.
Right. So pretty much, all of my apartments that I quote, regardless of the carrier, they're going to do an inspection on them. So that's a big thing, loss control, making sure that they come back with favorable loss control. So what they're looking at, like I said, the condition of the building, they'll be going around, doing an exterior inspection. Like I said, making sure that there's no graffiti on the building, that there's not unnecessary things touching the buildings. If there's barbecues allowed, that they're at least 10 feet away from the building, so they're not have a less ability of them causing a fire to the building. They're looking for cracks in the sidewalks, potholes, and things like that in the parking lot. Handrails, which we will get to, electrical systems. They're looking for just overall maintenance of the property. And as long as, as long as it's in good control and it's meeting the right codes, if there's railings, or there's like a little set of stairs, that there's, the appropriate railings in place with the appropriate spacing. And I mean, that's what they're after, just the overall condition of the building, just to prevent losses. So,
Right.
anything that creates a bigger exposure now creates a greater liability for a loss to occur. So what they're trying to do is minimize the reason for a loss to occur.
Sure. But, I've heard from you that there's a new emerging railing issue out there, because they keep constructing these the railings in more creative ways. And so tell us what's going on with railings.
So railings, most carriers are looking for a minimum of spacing of 4 inches. Anything greater than that is going to be a problem. Some carriers will go up to 6 inches, but I know that's tightening up in the industry.
And that's vertical, right?
Yes, vertical.
That's vertical.
The major problem that's emerging right now on newer constructed buildings are horizontal railings. They may look pretty, and the contractor may think that they look good, and they've got appeal and they're a good selling point, things like that. However, when it comes to insurance, they're not, because if you have horizontal railings, it basically acts like a step ladder. And you got little kids or something like that who can climb on up over it, get to the top, and then fall over the other side. So the horizontal railings, no matter how they may look aesthetically, they do not work insurance-wise. They aren't a good thing. But there are simple fixes to horizontal railings or the vertical spacing that you can do to meet the requirements. The cheapest generally is getting some sort of like mesh wiring, and then just putting that around, and that solves your problem of the spacing in between. Others will go in and drop in another vertical slat if the on the vertical side, if the railing distance is too wide, to shorten the distance. So there are easy ways to fix it, and it doesn't have to be, you have to reconstruct the whole balcony with the railing, or the staircase that has a handrail or something like that. There are simple ways to go ahead and get that fixed so you are in compliance with the underwriting guidelines.
Good. And so there's been a lot of fires related to electrical panels. And this has been going on, some carriers have been looking at those for about, I don't know, maybe more than 5 years, but it really wasn't accepted until they really started having some fires related to these panels. Tell us about this. This is a definite loss control issue, and it can be expensive.
Yes, yes. Replacing your electrical panels can be an expensive project and an expensive undertaking. However, like Anay said, a lot of carriers have tightened up on the types of electrical that they'll be accepting, and so anything that has Zinsco or Federal Pacific stab lock type panels, they are prohibited by all of my carriers. And honestly, I don't know too many carriers out there that I've heard from others that are writing these types of electrical panels, because they are a major cause of fires, and they are becoming a greater concern. So on our supplementals, there is a question on there that asks if they have these type of panels, and a lot of times I get the answer back yes, which then I won't even bother submitting it to the carrier, because I know it would be an automatic decline. However, when I get questions that have that, or supplementals that have that question answered yes, I always go back to you as the broker and ask you to confirm that's correct, because generally I'll look at it and it shows that there was updates, say in 2015. Well, these panels were stopped made in like I believe it was the late 70s, early 80s that they stopped making them. So, if they have their electrical upgraded, then I highly doubt that the electrician is, indicating that, hey, these are still good panels to have in place and things like that. So, and I know that, a lot of people, I get this response a lot. Oh, I didn't even know what that was. I just answered yes. I didn't know what they were when I first started. That's just not it. When I first started, I didn't know what they were. So, I Googled them, learned about them, and obviously I've learned a lot more about them, from my years of underwriting experience and like that. So I'm always happy to, let you know that those aren't acceptable. I do see that somebody has a question. Those types of panels, again, it's Zinsco, Zinsco. or Federal Pacific stab lock.
Federal Pacific what?
Stab lock, STAB - LOK.
Okay.
Or similar type of panels.
There was also a question, Michelle, and I think we may get to it, but they were asking if there was a supplemental that they should use for submissions.
I do have an apartment supplemental, but I can work off of other carriers as well. So if you don't have one already completed, I'd be happy to, forward you a copy of the one that I have. Otherwise, I can work off of most other carriers. If I have any questions or I'm missing any information that I need specifically, I'll definitely reach out to you.
We'll have Jacob can send that out with a follow-up tomorrow.
Right.
So you just have to let him know which one you want him to send.
Yeah, not a problem.
Okay. All right. So let's talk about underwriting considerations. So there's, this is where there are different types of occupancy, different types of management of the property, and those can really affect the maintenance of the building, potentially, the condition, and that's really because you could have an exposure that's what they consider a higher risk. So talk about professionally managed versus a landlord managed situation.
So landlord managed generally, is you're the building owner, you're the one managing your property, so, you don't have a third party involved. Professionally managed, is a third party management company who generally, is handling collection of your rent. There could be an on-site manager, or they send a manager out there to, walk the property and see if there's anything that to them is striking that they need, or if, the tenants send in a complaint or something, or, have an issue with something in their unit, they're generally the ones to take care of it. And then, like I said, if it's landlord managed, you're the one responsible for all of those types of maintenance issues and things like that, and in order to keep up with the upkeep of the building. So,
right. Professionally managed is typically going to be, and that wouldn't be all cases, because there are some landlords managed that do a fabulous job. But in general, professionally managed is probably going to be the more responsible party to make sure that the building is maintained.
Correct.
So tell us about student housing. How does that play into this?
So student housing is kind of similar to rooming in a boarding house type of risk. They are a much greater exposure, and so they, like I said, they're rated similarly. So they're not rated like an apartment where they're rated on the number of units. Again, they're rated on the number of beds that are involved. So, I have gotten requests in the past to quote like fraternity and sorority houses, and that's something that I can consider. However, they do go through an E&S market, so it would be a non-admitted quote that I would be offering if I'm able to offer terms. So it really depends on just how it's made up, and is it 100% student housing? I can consider things that are maybe because they're next to a college, so they've got maybe 10% housing or something like that, or they're close by. It really varies, but I can go all the way up to 100% student housing. I do have some markets that will consider those.
Oh, excellent. Well, there's a whole aging population with the baby boomers, and so senior housing is become much more common. How is that handled as opposed to student housing?
So senior housing kind of varies. So my markets are limited on it. It depends on if it's like an age-restrictive apartment complex where, it's 55 and older only that can live there. That's one thing. But then if you're talking more of, where they offer some sort of services like memory care, or they have on-staff nursing and things like that, where it's not necessarily like hospice or things like that, but it's still senior housing, but just with some additional assistance. Generally speaking, those aren't the type of risk that I'm able to consider, just because of the greater exposure there is, for the liability, and then even the professional exposure that it draws up when you have things like memory care and on-staff nursing and similar similar characteristics to those things.
Okay, good information. So let's continue with some other underwriting considerations. So how does the number of stories in the building, and I assume that's going to be tied to whether the building's sprinklered or not.
Right. So especially in California, anything 3 stories or more that's frame construction, we're generally looking for it to be sprinklered. Especially for our preferred markets, if you want them to be able to take a look at that, for them to offer quotes. Otherwise, I mean, again, I do have other markets that will consider the they don't care if it's sprinklered or non-sprinklered. But if you have a sprinklered building, you've got a greater step of protection to your building. And also, if your building is sprinklered, going back to loss control, that is something that would be checked, and they would, the loss control would want to see that the appropriate testing is done on the sprinklered system. So, just because you have the sprinkler system, you want to make sure it's up to date.
Right, and it meets the criteria for the sprinkler credit, which everyone loves because it really can reduce up to 25% of the property value, right? Yeah. Mm-hmm. So, but if it's not properly, if it's not an acceptable sprinkler structure or setup, then that becomes a problem because they might remove the sprinkler credit. So we've seen that, right, Michelle?
We have seen that.
Yeah, so that's something to pay attention to. You can touch base with Michelle on that if you have further questions on that as to whether a building's sprinklered or not. What about concrete walkways and parking lots?
So like I said earlier about the loss control, you're just looking for cracks. I mean, yeah, normal cracks are going to happen in the sidewalk, but you don't want it to be unlevel where somebody could easily trip over it and then cause yourself a GL claim from a trip and fall exposure. So, maintaining that, making sure, it doesn't come unlevel. I mean, normal cracks and things happen in the surfaces all the time. That's not a problem, or any sort of like potholes, things like that. Just, ways that people could potentially injure themselves, and then a potential claim could arise. So just looking for a good maintain of those.
Yes, and you wanted to talk about pools. Obviously fencing becomes an issue, but I'll let you go through the underwriting criteria here.
All right. So pools. If there is a pool on premise, it needs to be fenced and with a self latching or closing lock, so that people can't get in there, and that the door will close after you've walked in. I have recently gotten some submissions where there's a pool on premise, but it's empty. And I do have 2 carriers that will consider empty pools as long as the pool itself is covered in some sort of way. So it could be, you could put a tarp over it, or it's, boarded over, things like that. But again, it would still have to be locked and fenced so nobody could get in there. Because again, you have an empty pool, somebody decides they're going to go in there and then they fall in and injure themselves. So again, we're just trying to limit the exposure. So the 2 markets that I do have that will consider them, again, those are E&S markets. So it would be a non-admitted option.
Yes, that's I mean, just define coverage is great. Non-admitted don't be afraid of non-admitted. And also keep in mind that there's going to be a charge for the pool GL, right? The GL exposure. But you want to always consider whether you want to insure for property, because every once in a while something unusual happens with a pool where, a car drives into it, there's property damage, physical damage to the pool, and it doesn't have any property insurance. So that's something to always review with your with your insureds. I think we have another question. What about tenants with pets, especially aggressive dog breeds?
Generally, I don't have a question on the supplemental that ask about pets. So for us, it's generally not a problem. It's more going to come down to, your landlord, either the building owner or their property management company that they're using, what their policy is when it comes to pets.
Okay. That's great. So that opens that door. And then one more question, the height is the height of fence an issue? I assume that they're talking about the fencing around the property.
Yeah, around the pool. Generally, 5 to 6 feet is what I see for, the height of, you don't want it to be 2 feet tall. That's not really a fence around the pool. But generally, I mean, standard, I feel like most of the time it's either 5 to 6 feet at minimum. Taller, great.
Okay. And then fire extinguishers attached to the buildings, that's a standard loss control consideration.
Yes. So we're just looking to make sure that they're properly tagged, properly hung, and that they are inspected each year. There's plenty of companies out there that come out and will service them, make sure you have the right type of fire extinguisher for the type of building that you have. It's located in the appropriate places, it's mounted correctly, and it's tagged. That's really what we're looking for when it comes to fire extinguishers.
Perfect. Okay, so here's some of our coverage features. I mean, it's multiple carriers, but in general, here are some of the basics. You want to go over this briefly, Michelle?
Sure. Yep. So for a special form or replacement cost, to be eligible for that, we're looking for either a newer building or even an older building that's been updated within the last 30 years and full updates again to the wiring, plumbing, heating, and roof. And then our standard for GL is $1 million, $2 million. I do have some carriers that will offer 2-4, but that varies. And then, so, if they need the higher limits, we have the ability to write an excess policy to meet those requirements, or, maybe the insured owns a location and has a schedule of 8 apartments. And instead of having a combined 1-2 limit, they don't want to write all the policies on an individual policy, but they'll just do that, and then they decide, okay, I'm going to get a $10 million umbrella to go with it as well. So that way, your combined limit is a little bit greater, and you're not as concerned of one loss potentially wiping you all out for all the other locations. And then property limits, I'm $75 million. I can go higher than that. It's really just going to depend on the carrier and the makeup of the risk, but $75 million is a good idea, like a good way, at least I know I can go up to that one for sure. The higher ones, they're going to cost anything higher than that. They're going to have a lot more underwriting to them, and, more questions could be asked and things like that. But I do have abilities to write the higher property limits as well. And then we've talked about the older buildings are still eligible as long as they've been upgraded. And then we have package policies, so we can write GL and property. And then there's plenty of other coverages that we can add on, such as building ordinance and equipment breakdown and things like that for the property.
Excellent. Excellent. Good information. And tell them about your apartment profile. This is probably really helpful for a broker.
Yes, so this is our risk profile, which you can find on our website. It's a fillable form that you can take with you, or, you have an insured calling in and, they're interested in getting a quote and you just want to jot down some quick information. This gives you, enough to be able to transfer the information over to Acord applications and like that. And this is a great tool for a new purchase, or if you're going out to the building yourself and you want to make some notes while you're going out there. It's a great little tool to use, and have handy just to gather the basic information.
Yes, I think and it is available. It's a fillable form. You could even email it to a client, and have them fill it out for you if that was appropriate. So we have one more question, Michelle. Someone's asking on the properties with more than one building, are you able to blanket coverage? I'm going to say yes, but I'm going to let you answer.
Some of my carriers allow me to blanket coverage. Not all of them do. But if you are looking for blanket coverage, or even if my carrier is not able to blanket coverage, I'm generally for multiple buildings. If it's 2 buildings, most of my brokers will just fill out 2 Acord 140s, one for each building. But if you're talking 10 buildings or something like that, I just need some sort of statement of values in order to do that. So even if I'm able to blanket the limits, the carrier's still going to want to see a breakdown of the buildings so that they have that backup information in their file in the event of a loss.
And we have that on our website under applications and if you go under apartments, it's all bundled together there. So you can find that statement of values if you need a schedule.
Correct.
Okay. And how to get a quote fast, Michelle?
I just need an Accord 125, 126, 140, and then some sort of apartment supplemental. Like I said, I can quote off of other carriers, or you can use our own. I do see a question asked if a risk profile is the same as our apartment supplemental. It is not. The risk profile is just for you to gather the basic information. The apartment supplemental goes into much more detail and asks you much more specific questions about the property. And then if they have previous loss history, loss runs are always great to have. If they've had any losses, letting me know what type of loss it was, what happened, if there was property damage, confirming that the damage has been repaired, and then what actions they've taken in order to try to prevent future claims of that from rising again. And then if you have a target premium, that's always helpful for me. That way I could tell you maybe right off the bat if I think I'm going to be competitive or not on a risk.
Section 8 question. There's a question still. Did we get that on Section 8? Section 8 or federally assisted housing markets?
I can consider things with Section 8 housing. Not 100% Section 8, but, if there's a portion of it, it's definitely something that I can consider. It is a question that is on our supplemental.
And by the way, the supplemental is also packaged in, if you go to our website, CIDinsurance.com, and I'm going to move us right along here and get to that page. And on our website, you can you'll find a section up on the tab under resources. I think there's actually one for applications by itself. Just click on that, and then you'll just go to the property casualty section, and you will find apartments right there. And it's got everything. It's got the supplemental in there, and it's got the statement of values. And then it tells you everything that we would need for a submission. So that's a fast way. Jacob will also send those items out to you so you have them after this webinar. And we want to thank you for joining us. And what we would love for you to use our tools on our website. We've got marketing tools. We've got proposal templates. So make sure you check out under the resource section on our website, and then start submitting today so Michelle can provide some competitive quotes for you. Thank you all for joining us.
Thank you.
Bye, everyone. Have a good day.